Thank you for joining us again and welcome back to our channel. If you are joining for the first time, we always appreciate your time as always. It is important for us to continue to look at the data between Africa's geopolitical partners and the relationship that they are building. These moments are times where history will remember those countries that continue to support the continent and those that refuse to walk alongside the continent of Africa, that really want to still subjugate the continent from a whole lot of areas which are not going to be relevant in today's multipolar world. African countries have said, we do have the natural resources, we don't have the know-how to an extent, bring us the know-how, and we're going to give the resources, and we're going to work on a win-to-win basis. However, at some point, Africa will continue and start adding value to its own natural resources. The geopolitical partners must accept that, must live with that, because it's the natural way to go. Because Africa cannot only just remain on exporting natural resources. So, despite countries loaning money to the continent of Africa, African borrowing money from international partners, IMF, World Bank, who gave them an exorbitant interest rate. China has also benefited from the continent of Africa despite Chinese investment and incredible infrastructural growth and development, which is unquestionable. There is no two-way about it. So comparing Chinese investment in Africa and modernization of Africa alongside other geopolitical partners, it's like comparing apples and oranges. So today we really want to look at the reason why China's investment and support of the continent of Africa, on the other hand, is very useful, and on the other hand as well, African countries' natural resources and the collaboration with China has also helped propel Chinese industry and growth. To have a better understanding in regards to this data, thanks to Behind Asia, that went beyond the ordinary to put forward the data to let us, our viewers, know that at some point, this particular partnership with China and Africa is a two-way street that is on a win-win part, irrespective of how you see it. I'm sorry, it's just the fact, because the United States of America took a backseat. The US's investment in Africa is on a rollback, and the European Union cannot come out clear and confirm where it stands with regards to investment in the continent of Africa. Other partners like Russia are taking the bull by the horn to move the continent forward. So this is just what it is at the moment. There's not no other way to sugarcoat it right now. So China understands the vital importance of the continent of Africa, of its natural resources, and the major player of the international industries of the future, talking about the raw materials coming out from the continent of Africa. So, but first, thanks to Behind Asia, let's roll the first part of this data analysis and the importance of Africa to China and China to Africa. While we give you the first part of these discussions of the details, then we're going to come back to give you another perspective as to the reason why the collaboration has raised eyebrows across geopolitical capitals around the world, but African countries are not backing down anytime soon. Let's play the clip.
China's presence in Africa has grown exponentially over the past 2 decades, transforming the continent's economic and geopolitical landscape. From massive infrastructure projects to resource extraction and trade agreements, China's investments in Africa have sparked both optimism and criticism. Proponents argue that these investments offer African nations a chance to develop and modernize their economies, while critics raise concerns about debt dependency and neo-colonialism. Regardless of these arguments, what we need to understand is just how big has China really become for Africa? How much are they investing in the country? What is the trade like? And the impacts to many African nations. Let's first start with the Foreign Direct Investment (FDI) data from China to Africa. This is the most important indicator to tell us just how big China's financial presence in Africa has become. Many news articles out there have already discussed this in length. But just how big is it when we look at it from a time frame? Well, here's a graph with data that we collected from the Statistical Bulletin of China's outward foreign direct investments from 2003 to 2023. As you can see, investments into Africa were rather small from 2003 to 2006, yet it rose massively from 2007. It was that year that truly kick-started big annual investments into Africa. What most news often mention about these Chinese investments into Africa, however, is that while Chinese investments continued to flow into Africa, less and less investments flowed from the United States. Let's add the foreign direct investments of the US into the continent. As you can see, in the early years, especially from 2009 to 2014, investments had outpaced that of China by large margins. But in recent years, from 2016 to 2021, investments were not only less than that of China, but were also negative. Or as what should be known is that there were outflows of investments instead of inflows. American investors were withdrawing more money from Africa than they were putting in. This is not necessarily bad, but a lot of observers said that this decline of US investments could create a missed opportunity for American firms to contribute to and benefit from Africa's economic growth. Africa, after all, is poised to become an economic powerhouse in the next century. But if you actually try to think about it, it does make more sense for China to invest heavily into Africa as compared to the United States. Why? Well, the answer is simple: natural resources. Africa is abundant in natural resources, from oil, minerals, and rare earth metals, which are necessary for China because it is the world's manufacturing hub. These resources are necessary for China to manufacture the goods it exports all across the world. Here's a graph on China's imports from Africa from 1992 to 2023, data that we collected from the UN Comtrade data, which, as you can see, has grown considerably fast, with the latest year available for 2023 showing imports of over $89 billion. But in all honesty, it's not really that big.
The United States of America's investment in Africa, like I said in my opening, has been curtailed recently or in the past. And we have seen the US cut off aid in the continent of Africa, put some African countries under pressure regards to their geopolitical decision making. It's as if African countries cannot make their own choices, whether working with Russia, working with China, going closer to the Indians, or working alongside Turkey, or you may even say they're working alongside Middle Eastern partners. Whatever the perception will be, is that African countries have come to the United Nations and question what's going on here, that a number of our issues are going on and nobody is basically talking about our own problems. Like I've always said on this channel, the former United States of America ambassador Greenfield came and said African conflicts are at the lower end of the United States of America's priority. So if we seek other countries like China, who understands the infrastructural development and growth and the need that African needs at this moment, are coming clear and bold and saying that we are in need of resources, we're going to build you XYZ, you're going to help us and we're going to help you. For that reason, China hasn't hidden the truth that it's benefiting from Africa. And Africa's government and experts and nationals too have not said that they don't benefit from China, rather. They benefit from China, and the data doesn't lie. So the US has taken a backseat. You cannot blame China for stepping up at this moment. Let's play the clip.
China's imports for the entire year of 2023 was over $3.13 trillion. And imports of just $89 billion is a small drop in the bucket for them. But it is not the figure that really matters. It is what they import. which, as we mentioned earlier, is largely tied to natural resources. And that's a large part as to why Africa has become a source of Chinese investment. Let's put this into perspective. Here's a map of Africa, as you can see, and it is well known that China imports billions of oil from this continent. In 2021, Africa contributed 13% of China's crude oil imports. 8% were from Angola alone. While it's not a significant figure, it is very significant for Angola itself. In 2021, crude oil accounted for over 83% of the country's total exports. Moreover, here's a graph of Angola's total exports to China from 2011 to 2022, data from Comtrade. As you can see, these exports are massive, where in 2021, exports amounted to over $20.1 billion. Do mind that Angola isn't a large economy. Its GDP size, as published by the World Bank for 2021, was just $66 billion, which means that a huge portion of their economic size derives from this oil exports. Now, it's not just oil that matters here. It's also other minerals. In the Democratic Republic of Congo, DRC, the country is known to hold over 15% of global copper deposits and over 50% of cobalt reserves. These minerals are known to be critical for modern technologies, particularly in the production of electric vehicles, EVs, batteries, and renewable energy infrastructure. China has become the world's largest electric vehicle market. Data from the International Energy Agency shows that the number of new electric cars sold in China far surpasses that of the United States and European Union, with the latest year for 2023 showing new electric cars sold of over 8.1 million, which is also much more than both the US and EU combined. Furthermore, China has also emerged to become a global leader in electric vehicles, with their brands like Build Your Dreams, BYD, reportedly surpassing even American giant Tesla in many criteria. Put simply, the minerals essential for electric vehicles are necessary for China's electric vehicle dream. Hence, this country, the DRC, is vital for their goals. There are various news reports out there showing just how much China is investing in the DRC, especially in these critical minerals. These investments for mining facilities would then be exported back to China, using them to fuel their economic growth. Here's a table of the DRC's largest importers for 2021, which, as you can see, China emerges as the largest with over 41% of their total exports. This shows just how reliant the DRC is to Chinese money. After all, if China suddenly stops importing from the DRC, it would spell a huge disaster for their economy. These critical minerals, oil and so on, are the ones that fuels Chinese imports from Africa.
Africa, despite the great need of support financially, investment, development and growth in different areas, the African countries can also stand up tall and say they have helped China to grow the Chinese manufacturing industry. How have they done that? Because China is the manufacturing capital of the world. And in that regards, China needs to export all of these products that it manufactures to the United States of America. The US have few natural resources in terms of compared to the continent of Africa. So China brings a lot of these resources from the continent of Africa, manufacture these products, export them to the global economy. So in a way, Africa is propelling the growth around the world, but you will never want to hear that, or it's never talked about in that aspect. So China has accepted that Africa is helping them, and that's the reason why Wang Yi, the most important Chinese diplomat, who said that there will be no global modernization without moving the continent of Africa along. Let's play this clip.
But before we talk about the debt and infrastructure part of the story, which is important, Let's first talk about the mining footprint of China. Just how big and how much is China investing in African mines? Well, in an overall point of view, here's a graph with data that we collected from RMG Consulting showing the corporate control over total African mine production in 2018, which, as you can see, shows that 6.7% of Africa's total mine production belongs to Chinese companies. But the first is surprisingly a British company, which may not really be a surprise to many of you. Nevertheless, Chinese companies, being the second largest, is already significant. But just how big are these mines? Well, some of the largest include the Tenke Fungurume mine in the DRC. News reports stated that China Molybdenum had acquired controlling stakes from Freeport-McMoRan. The mine is one of the largest producers of cobalt globally, accounting for a significant share of the world's supply. Then there's also the Siko mines, also in the DRC, which is a joint venture between Chinese companies, Sino Hydro and China Railway Group, and the Congolese government. The project was a $7 billion infrastructure for minerals deal. China invested in roads, hospitals and energy projects in exchange for mining rights, which is a very interesting deal and showcases one of China's resource-driven investment strategies in Africa. There's also several mines in Namibia, one of which is the Husab uranium mine, an investment made by the China General Nuclear Power Group, and is known as one of the largest uranium mines in the world.
I know the elephant in the room has always been the debt trapping issues back and forth. Of course, you will expect that debts will be, if a region is attempting to grow, to advance, to kind of face the challenges of the future, because Africa have to move from the current farming method that they have, the different growth prospect, to a whole lot of different level at this stage. So it needs capital, it needs investment, it needs collaboration. So these finances that will be coming from China, you would expect that the debt will increase. Make no mistake, Africa is owing more money to multilateral institutions like World Bank, International Monetary Fund, and also international finance corporations and other bodies that were formed before even Africa became independent. So there is a hypocritical discussion with regards to China's debt trap. Of course, if you borrow money, you have to pay back. There is no question about that. And in that regards, this conversation has come to a point where it's as if Africa is the one only struggling to pay back the debts. Not at all. I mean, China has invested in France, in the United States, in Europe as well. And China has helped bail the US in some areas as well. So this issue of debt trapping, the conversation will stay as long as Africa needs to grow. Because we all will expect that if you want to invest, build new hospitals, build new factories, build new investment centers, more industrial complexes, you will expect to ensure that you can borrow money from those who are going to support you. In the course of doing so, you will repay back, but it won't be within a short period of time. It will be for a long period of time. So the question about debt trap is not going anywhere. It could weigh on Chinese side, weigh on the African side. Africans will pay the debt, and that's what it's going to be. Unfortunately, it is what it is. Let's roll the clip.
Now, let's talk about the final part of Chinese investments into Africa: infrastructures. Infrastructures are arguably the most important part of China's involvement in Africa. Some of the largest investments include the Addis Ababa Djibouti Railway and the Mombasa-Nairobi Standard Gauge Railway, which are flagship projects, collectively costing over $8 billion. There's also port investments, like the Dorale container terminal in Djibouti. These, and many more out there, are helping build Africa's economy. But to others, some believe that this is causing a debt trap to many African nations. Here's a graph on the total external debt owed by African countries, data that we collected from the International Debt Statistics database. As you can see, the red represents both the bilateral and private debt owed to China. Private debt amounts to over $22.8 billion in 2023, whereas bilateral debt amounts to $61.98 billion. The difference between private debt and bilateral debt is that private debt refers to loans provided by Chinese private banks, corporations, and other non-governmental financial institutions, while bilateral debt refers to loans issued directly by the Chinese government or its state-owned entities. Here's a graph with just Africa's total external debt to China, which, as you can really see, has grown very fast in just the past few years, and a lot of this is tied to those infrastructure projects that are helping build Africa. Hence, it has been part of the reason that led many people to believe this debt trap diplomacy. But of course, many of you might believe that this is necessary for Africa. Indeed it is, but a big part of the problem is the fact that it might have been too big. Here's another graph on Africa's government spending. What's surprising about this graph is that debt service has risen considerably in 2024, with over 13.6%, as compared back in 2016, where debt service was just 4.7% of government spending. Put simply, for every $10 that the government spends in Africa, $1.36 now go toward paying off debt, a significant increase from just $0.47 in 2016. Furthermore, you can also see that education expenditure has dropped. So, is it really benefiting Africa? Well, one last thing before we end the video is to show you again the imports from China to Africa. But instead of just the imports, we add the exports from China to Africa. This can be seen both as good and bad. As you can see, Chinese exports to Africa far exceed that of their imports. In 2023, China's exports to Africa was over $172 billion, which is nearly double than their imports. The reason why this is good is because Africa may need these imports. These can be materials for their infrastructure development, for their technological development, or even affordable consumer products. But the bad part of this is that Africa may either run out of foreign dollars to buy Chinese products and put their economy at risk. This trade imbalance means Africa is spending more on Chinese goods than it earns from exports, creating a dependency problem. Over time, this can drain Africa's foreign reserves and hurt local industries, as cheap imports make it harder for African businesses to compete. But anyway, do let us know what you think.
Hopefully the details and data from Behind Asia has given you some perspective as to the reason why the collaboration and partnership between China and Africa is just warming up at this stage, despite what the global media want you to believe and geopolitical partners want you to think of Chinese involvement in Africa. There's always a balance that needs to be struck. So these two countries, China as a country, continent of Africa, a lot of nations, will find a balance at some point. So the geostrategic position of the continent of Africa, the abundant mineral resources in the continent of Africa, there are a number of countries in Europe, the United States, and around the world that benefits from raw materials that comes from Africa without them knowing. As a result of Chinese businesses and companies are buying from Africa, manufacture those products, export them to markets around the world. So they are, to an extent, helping the global economy as a result of Africa's own natural resources. So Africa, irrespective of your position, irrespective of how you see it, has propelled the global economy in several ways based on their partnership with the country of China. So the continent of Africa should know where it stands at this stage. It should continue to select partners based on their performance and collaboration, like we've pointed out always, because these are critical times in the continent of Africa's history. African governments to readjust their particular fundamental plans for growth and to take very unpopular positions. It doesn't matter what the geopolitical partners will think at this stage, for them to scale and basically create the industries of the future and look a little bit inward to basically grow their different partnership and collaboration and revive the African Continental Free Trade Area, because that's going to be the game changer for the future. As we've seen, the African Growth and Opportunity Act at this moment is on life support. I want to thank you for watching. If you are joining EDUSPLORER for the first time, I encourage you to smash the like button, share the video as we continue to tell African story from our own strategic perspective. For now, have a good day, and I will meet you in our next episode. Bye-bye.